Well, today is December 13th, 3 p.m. here on the East Coast. We wanted to follow up on the video we posted about AMC a few days ago. The stock just continues to get crushed. As you can see here, it's all the way down to 23. In the video that we posted on the 10th, so that's just on Friday, we talked about the fact that AMC had the options complex turned against it. So you used to have the options complex support the stock right here at 40. Well, all of this put gamma, which is this orange line, and we described this in this video that you can look up here, showed that gamma was going to accelerate the movement of AMC, and that gamma movement, the volatility of AMC, in other words, was likely to stop out right around 23. And that's because you can see these gamma curves flatten out, which indicates that hedging flows are likely to settle down. So with that, when we flip over to the actual stock price of AMC, you can see we made that video here on the 10th, and then the thing just legs down again, all the way down now to 23 and change. And we think that this may be a time for AMC to pause, and we wanted to talk about why that is. Maybe the selling is going to take a rest. First, we want to flip to our equity hub, and this is our version 1 equity hub. So for many of you, you're familiar with our equity hub version 2. There's a link to the equity hub version 1. So if we enter an AMC here, by the way, you can get a free trial of this if you go to SpotGamma.com. We just typed in AMC, and we want to show a few things. One, the key gamma strike is still above, so most of the gamma in the name still remains at a few strikes above. But note this, the top put open interest is now in 20. There's a lot of people that went into short-dated puts trying to play this name on the decline. But what we really wanted to focus in on is this curve change. And you can see that for the most part, this is the same structure on Friday that we had today, and it's the same deal here. Now, because the stock has moved down a little bit, the gamma curves, you can see for calls, they flatten out right at 23, and for puts, it seems to accelerate a little bit more, and that's because I think that people have added into these 20-strike puts. But the reason that we think that maybe the stock is starting to reach its lower bound, I think 20 is probably about, and granted that's another almost 10% lower here, but the stock is so volatile. But the reason we think that the selling pressure is likely to sort of abate here is due to this. You can see that most of the gamma in the name expires on 12/17. That's Friday. That's 37% of total gamma in the name is going to now be removed. And as you can see here, this is mostly put gamma. And you can tell that because the orange line is below the blue line, which tells us there's more put gamma right now than call gamma. And again, that 20 put line is such a big one to add some gamma as we push lower. So if you were to look at the actual open interest on 12/17, you would see that there are 45,000 20-strike puts there. By far the biggest. There's a bunch up at 23 as well. So a lot of these big puts are short-term puts are going to expire into Friday. And that's going to change the complexion of this gamma quite a bit. Now, if you remember back the video that we posted on Friday, it was also in the money calls that are really taking a beating. Those are still positioned out in January. We don't think those are going to change. Those are likely to expire, be in position till expiry, that is. And so, again, for AMC, the short-dated port interest really has pressure going now in the stock as traders shifted into the expiration that is only here a few days away. So, once again, AMC we look for certainly 20 to kind of be a bottom. We think we're kind of approaching the bottom based on the fact that these gamma curves are starting to flatten out. And with this expiration, AMC may get some relief before we head into some more pressure into January. The other stock we want to note was Tesla. If we just take a quick look at the Tesla stock chart, you will see the same thing, that it has had a similar sell-off today. It's down about 4% on the day, which is a fairly substantial amount, but it's below this 1,000 strike area. And the 1,000 strike contains a ton of open interest in Tesla. So if we just flip over to Tesla in our screen here, you can see 1,000 has the most calls, the most gamma, the most delta. 35% of the position expires on 12/17 from a gamma perspective. And so despite the fact that the stock is a fair bit under, again, this 1,000 level, we do look for mean reversion or pin type flow in AMC as we shift towards FOMC. Now, of course, if Powell really upsets the market, then listen, these pins don't really work as well if the whole world starts selling stock. But we think that kind of left to itself here over the next day or two, we would look for some mean reversion in Tesla back to 1,000 because there's so much gamma tied to that level. And the position of Tesla has not materially changed. Yes, the key gamma strike and the hedge wall moved down, but that's more of a function of the fact that Tesla has declined in price. You will note that the put gamma from 1,200 down to about 900, not substantially larger, but it is larger. So that's telling us that puts are a little more in control of this stock at the moment than calls are. But with this expiration, that should change, right? The makeup of the gamma profile should change. And that coming out of 1217 gave us a good clue of whether Tesla has room to run or it may sell off a little bit further. We would note that if you were the type of person that wanted to play a gamma squeeze, what you want to see is this blue line jumping over the put line. So if we were to break 1200, well, obviously it's quite above now, but if the gamma profile was to adjust enough such that the orange line was down around 1,000 and you just have a gap, the blue line accelerating above, that is good gamma squeeze positioning, right? Because this is pure call gamma. That's going to tell us that options dealers are going to pick up their hedges as the stock rises. So that's really what you want to see. Right now with the stock around 1,000, there's quite a bit of fuel in and around 1,000, plus or minus, say, 25, 50 bucks. It's just a slippery space for Tesla to kind of bounce up and down. But again, 30% of that position is going to expire on Friday, plus whatever Powell has to say in terms of rates could really get not only Tesla, but a lot of these other stocks that have been beaten up moving. So with that, if you have any questions, please put them in the comment section below. Hit us up at SpotGamma on Twitter. And one final note, if you're trying to learn about Gamma, Vanna, Charm, and all these different dynamics, we just launched a new course today. It is called The Hedge. You can go to academy.spotgamma.com. We walk you through everything from the basics of options trading all the way up to how to structure trades around those advanced Greeks like Vanna and Charm. So again, if you have any questions, please leave them in the comments or send us an email, info@spotgamma.com. Thanks.